Hey, it's Anthony with Land Title. I came to bring your Denver Metro update for the month of October. Here we are with our highlight reel. Don't forget, this is always here if you need it for a few quick talking points. Well, let's kind of dive right into the data. The biggest thing is that increase in active inventory and just kind of what's happening as interest rates have kind of come down a little bit. And we've had some good news kind of opening up in the economy. So a lot of that data is going to be front loaded into our showing traffic. So really keep your eyes on showing traffic to see how much interest rates falling has really affected things. But you can see it here because the most preliminary data set that we all track is pendings, right? So under contracts were up 24% last month. That's a huge number. Yes, we have more active inventory on the market, but it's exciting to see those buyers coming back into the market. Now, it's not everywhere, it's not across the board, but you definitely can see some of us putting our best foot forward when the buyers are out there in the marketplace. We still have over 10,000 units of inventory on the market, just like we did for the last couple of months, but it will start to get better. And a lot of what's causing it to get better is still people pulling inventory off of the market. So there's a couple of factors here, right? More buyers and people coming off of the market. The seasonal shift happened a little bit earlier, but you can see it here. We've had the highest inventory level in 5 years, but it's still not that high, right? For us to be at a really true balanced market, a lot of times we're talking 20, 25,000 units on the market. So this is a good sign to see things bouncing out a little bit right now. I think if you're a seller, you can really see 3 months of inventory probably feels a little bit more balanced in the marketplace than it has in years past. But be careful, markets are not all the same, right? If you're out in Elbert County or you're in Denver, it feels closer to 4 months. It probably feels like the buyers are holding more of those negotiating tactics and cards, right? So your sellers are working a little bit harder to get things done. If you're out in Adams County or Jefferson County or Broomfield County, much tighter inventory situations and sellers are in more control. So it really does affect submarket to submarket differently and at different rates, right? Now, the big thing is days in MLS. This is active to under contract period. We're talking 41 and a half days in MLS right now across the board. Now, like I said, they're not all created equal. You got Broomfield at the slowest market right now, 52 days in MLS, but Jefferson County at the fastest market at 34 days. So it's still, we're talking 1 to 2 months to go under contract many times. That is quite a bit higher than it was this time last year. It's like, basically a full 10 to 12 days higher than it used to be. Now, let's break into detached and attached separately because the big thing with the market is the detached market is doing a lot better in some ways than the attached market, but the luxury market has definitely slowed down in the last month just a little bit. You look at that 2-3 million marks, they're down 30% in sales volume. If you look at the 1 to 2 million, though, they're up 17%. So the lower interest rates are definitely helping some of the market continue to progress. That 5 to 600,000 up 26%. So as money got cheaper, people came back to market, especially in our median sales range, right? So that's a good sign. The big difference, though, on the inventory level is inventory is up across the board, right? Because people want to sell and there just aren't as many buyers out there. So that's going to continue to rise the inventory. Now, if we look at the attached market, this is where it's really hard. Inventory is up across the board because you have more people wanting to sell property, but the appetite for the attached product is really low, right? Under 400,000, sure, there's some appetite left, but that's definitely more of a necessity type buyer. Now, buyers that are looking 5, 6, 700,000, they're down 20%. You get 800 and above, we're down 50% in sold units right now. So the higher end attached product is not doing very well, right? That's becoming a little bit of a sticking point. Now, if we look at month supply of inventory in the detached side of things, you can really see that it's still super competitive at the lower end, right? Anything under 500,000, less than 2 months of inventory, and then it starts to ladder up from there. The luxury market does have a lot of inventory. 7 months of inventory from 2 to 3 million, 11 months of inventory at 3+ million. There's a lot of homes on the market. There are still buyers, right? Even though they've slowed down quite a bit, but it's taking longer to go under contract. The bulk of the market is going under contract in 35 to 40 days. So that really doesn't matter based off of price range. The attached market, very different. It's very similar across all price ranges. We're talking 4 or so months of inventory under 2 million, right? We're basically 4 or 5 months of inventory across the board. 3 months if you look at maybe 4 to 500,000, but it's very much in the buyer's favor in so many ways. So the super luxury stuff, of course, there's a lot of inventory. It's very similar to the detached market there, but it is taking a little bit longer to go under contract too. Those active to the days on market are about 45 across the board. So attached and detached should really be considered very differently, and you definitely want to use the different sets of data with your clients when you're looking at them. Total sold units, month over month, it was down, but that is a very seasonal normal change. Year over year, we're basically less than 1% drop. So things are looking pretty good. Now, it is not the same across all the markets, right? If you look at Elbert County, you look at Broomfield County, they had big increases in sales over this time last year, but places like Denver County, Arapahoe County, Jefferson County, they've had bigger drop offs, almost 17% drop offs in some cases in sales last month. So it definitely is location specific. And as changing markets happen, they all change at different paces, even when they're headed in the same direction. So that's important to see. The one thing that caught me off guard a little bit this month is the detached and attached markets have seen some price depreciation. As there are more homes on the market and there are not a lot of buyers, we're kind of chasing prices down a little bit faster than we normally would. Now, some of it is seasonal, absolutely, but year over year, we're about 4% less than we were this time last year. So we truly have seen a price drop in the metro real estate market for a short period of time. Now, there's light at the end of the tunnel, right? So if you have people out there looking for a deal right now, this might be the best time for them to get out and shop in the fourth quarter before things really pick up. Interest rates are lower by at least 1% than they were this time last year. So buyers will get notice of that, even if it takes a little while, and they will be coming back to market. And that's going to push these prices right back up. So best deal of the year, absolutely start shopping now. If we look in the attached market, it is substantially worse. It's literally almost the same dollar value, but they're lower priced properties. So we've seen price depreciation over the last while, right? You can kind of see it on the chart there. Things stagnated a little bit over the last year, year and a half. They've just slowly started to slip down, and we're about 6% less than we were this time a year ago. So that being said, also a really great time to get into this product type because this could be the best deal we have in a long time. As buyers come back to market, all these prices are going to go right back up. So that's one thing that you really want to look for. Now, if we look at total sales volume, we've just kind of been in that same bottom of the barrel necessity buyers and sellers out in the marketplace, and we haven't turned that corner yet. Those big under contract numbers are going to make October, November, and December much more attractive months for the market. So when total sold units will start to increase over year. That doesn't mean they're going to increase better than September, even though they could be better than September, but they will outperform the previous years. So year to date, we're down about 2.5%. If we ended the year maybe flat or even a little bit up, that would be really great to see. Now, I wouldn't be surprised by any of that. You can definitely see the year over year changes or the year to date sold numbers for the counties. And some of those counties have definitely had a more positive increase. Like Broomfield's up 5% in sales, Elbert County's up 15% in sales. So there are places where they are seeing more sales this year. Definitely places like, Denver County at 3.5% drop follows the market very well, or out in Jefferson County feels that 2% kind of drop off in sales. If you go over to list of sale price, this is my last slide for you. 99% list of sale price means active, or when it basically is under contract, what is that price? So it doesn't include price drops and it doesn't include concessions, but 99.1% tells you that homes that are on the market that are selling, they're selling close to whatever the list price is. And you can see that from 400,000 all the way up to close to 1 million. We're in that 99% range. 99% is a pretty good price, right? It means if you have it listed for 1 million, it goes under contract at $990,000. That's a good sign. Hopefully you didn't have to do any price drops to get it there, but it's one of those where this feels very stable. It looks a little bit worse than it did a year ago, but over the last month or so, it's really bumped back up as the cost of money has gotten cheaper. So definitely watch this because all of these factors are starting to point to more buyer behavior in the fourth quarter than we've been seeing in the last couple of years. So great takeaways. It's some really light at the end of the tunnel, optimistic stuff coming down the pike. So I love to see that. Definitely go out there and scream from the mountaintops, get your buyers engaged early because fourth quarter could be the best time to buy for easily the next few years. So hopefully that is helpful. And if you need any other information or you want to support us on Land Title, we'd love to work with you. So thank you very much. And we'll catch you next time.